Hey Scott, how are you?
I am well, Mike. Hello.
Things are busy here at the Malone house, so the Malone homestead. So anyway, let's get going because I know you got a busy day. Let's start out with the announcement. Well, it's Thursday, so the announcement today that Taiwan is going to invest $250 billion in U.S. chip making under a new trade deal. That's a hunk of change. And obviously, it's mostly TSMC, which happened to have an incredibly great quarter that it just announced. That it's going to invest as much as $56 billion in capital spending this year, which a lot of it's going to go to United States, to its plants here. It's obviously going to build new facilities, and and in return, Taiwan gets reciprocal trading tariffs reduced to 15% and no reciprocal tariffs on pharmaceuticals and their ingredients, aircraft components, and some natural resources. So it's a good deal for Taiwan, and part of this, I'm sure, has to do with the perpetual threat from China, and they want to get offshore as fast as they can. But I think they also want to be part of this booming U.S. economy. So their strong outlook on their stock, on their quarter, also sustained, gave a little momentum to the AI boom. That
Yeah, it really did.
if they're still doing this, well, maybe maybe it's still a good time to invest.
Right. This was a big move for Taiwan. This was a big move for the chip industry. That was a big move for the AI, bubble to continue. You look at TSMC stock as you and I talk right now. It's Thursday night, and this all happened Wednesday night.
Yeah.
TSMC reporting their earnings while we were essentially asleep. But the trading day that happened on Thursday was just up and down. Chip companies, chip equipment companies, pretty much anything to do with AI was way up because it sort of gave yet another shot in the arm to that whole AI movement, especially on the chip side. And it's interesting. This felt like, remember when Biden put the Chip Act into play, and all of
Yeah.
a sudden those once beaten down chip companies got this big cash infusion. Well, now those chip companies have been the red hot bells of the ball for a couple of years now, thanks to
Right.
the AI trade. And this was a big, big boost for them and their investors.
Yeah, I think the unwritten story, I haven't seen it anywhere. I see it in bits and pieces, but this is like the golden age, or at least the silver age of semiconductors. That they're not only back on the radar, they're front and center in the entire industry, entire electronics industry.
Yeah, I think they really are the foundation of just about everything going on right now, whether AI or mobile. Um, I mean, talk about quantum. It just seems like there's so much of that. All the data collection that's being done by companies like Palantir, it just seems like chips are the foundation of that, the building blocks of that. And it reminds me again, and you and I have talked about this back with the whole Wintel thing, when you needed chips for everything, and therefore you needed chip equipment stocks. And look at Lam Research, look at Applied Materials. These companies are just going nuts. And the charts have been like hockey sticks for almost, I mean, Intel is in the high 40s as you and I speak. Hasn't been, it was half that six
Yeah,
months
who'd have
ago.
thunk that one?
Right. And that is sort of a combination. You said that there is politics involved, the government is involved here. It certainly took a stake in Intel, but also the AI trade, which is hot in itself, but a real building block of that, a real big section of that is simply chips.
Yeah, you and I have always said, and I think the industry and the general public often forgets, but semiconductors are still at the top of the food chain. Everything flows down from them. AI wouldn't be possible, without the NVIDIAs of the world coming up with these huge, powerful chips. And Moore's Law, if you didn't believe it before, it's the most powerful a powerful mechanism driving modern life, and it's not going to end any. I've read that it's been dying multiple times, and that's the one that I actually get right when I say there's no obvious end to the implications of Moore's law, because it's a bet by the chip companies with the world that they will continue to innovate, and if one particular technology, manufacturing technology, fab technology becomes obsolete or can't keep up, they manage to come up with another one. And they've come up with another one for 50 years. And I don't think it's going to stop in our lifetimes. So they're back.
Well, and people just find, Moore's law is a term that maybe the current generation doesn't use as much as previous people, because now we're into AI and quantum, and it just seems to get faster and more impressive. But you're right. The costs are high. Look at what NVIDIA can charge for these chips. But at the same time, as we've seen from China, they can be done less expensively sometimes. Yeah. And that's important for the overall AI boom, and perhaps coming up soon, the quantum boom, but it's also good for consumers. It can take advantage of some of these technologies without breaking the bank.
Oh, yeah. I wrote a story once talking about a particular Intel chip, and it was state of the art in like 1975. And then it kind of fell off the radar, but it didn't really fall off the radar because these older generations of chips find new homes. So they turned into consumer, they powered consumer products, this chip. Then it got into cameras, and then it got into watches, the cheapo watches, the digital watches. And now, some of these chips are powering giveaway kids' toys, from Mickey D's and all that. They never disappear. They just fall under the radar as the next hot new chip comes along. So that's why, there's, how many chips are there in use in the world? 25 billion?
I have no idea, but it's a lot.
Yeah, I mean, it's amazing. Okay, so that, once again, AI chips get a new life, and that the industry gets a new life, and Wall Street's back setting records. So I'm not even going to talk about whether there's a bubble or not. There's obviously a bubble, but maybe this bubble doesn't burst for a while, or maybe it just slowly deflates, or it's replaced by another bubble. I mean, I'm not sure, but prediction is getting hard now because the news keeps coming out good. Okay, second of all, let's talk about the billionaires tax. The state of California, in its wisdom, being deeply in debt, has decided that it's going to, well, at least the state assembly, and initially, and Ro Khanna and a few others, talking about and basically passed legislation that would have a one-time only, but it's a one-time only over 5 years, tax on billionaires, people with net worth of $1 billion. And I'm not even sure it's annual income. I think it's total worth. They're going to get nailed at a 5% additional income tax rate. And we can talk about, let's talk first about the impact on we know a lot of billionaires, you and I, and we have a list here, courtesy of, I think it's FSF Gate, of the billionaires who are already moving out, even though they're past the deadline. Some of them are still going to try. Sergey Brin, co-founder of. Did I lose you?
No, still here. He's the co-founder of Google.
Okay, I didn't. I lost my picture. Sergey Brin, the co-founder of Google, he's worth $253 billion, and he's moved to largely Florida, and he's got several entities in Nevada, and he has a private terminal at Mineta. he appears to be moving out. Larry Ellison, worth 242 billion, co-founder of Oracle. He sold his Pacific Heights mansion on Billionaires Row off of market deal last year, and that suggests he may be pulling away from the Golden State. Next up, Reid Hoffman. He's worth 2.5 billion, the venture capitalist, who's a fairly rabid Democrat, but he said he'll probably pay for it, but he described it as badly designed and horrendous for innovation. So there's no indication he's going to take off. Jensen Huang, worth 159.1 billion. He's staying. He said, "We chose to live in Silicon Valley, and whatever taxes they would like to apply, so be it. I'm perfectly fine with it." Palmer Luckey, the Anduril co-founder, worth 3.5 billion, believes the tax would force founders to sell huge chunks of their companies. So he may be leaving. Michael Moritz, the VC and chairman of the Standard publication, 7.8 billion. He argues that California the plan will backfire, and that the state has become so dependent on deep pockets that it can afford to lose. It can't afford to lose those, and the proposal is the latest in a debilitating series of policies that have undermined the state's position as a cradle of progress. Larry Page is gone. I believe he's in Miami's Coconut Grove, worth 274 billion. Peter Thiel, he's moved out too, has opened an office in Miami, and he's giving seven-figure donations to the anti-tax committee. States that he is based in California, and that's all we know. I've seen other billionaires, most notably, well, I'll leave his name out of it since he's not public on this, but we have Ro Khanna, Silicon Valley's congressman, coming out all for it. And we have Newsom, who appeared to be all for it, but lately he's been backing off because he believes that the state is making a big mistake, and basically his dream is that it won't get enough petition signatures for it to get through and go on and even then it'll lose at the state level. That's sort of wishful thinking, but he'll be out of office by then. But he comes from a long line of billionaire friends and family and all that, and he seems to understand that this may have some profound implications, that you can't just add a tax on billionaires and expect them with all their movable assets not to move. What do you think?
Yeah, billionaires are very mobile by definition. They have a lot of money. They could go where they want. Billionaires, for the most part, try to pay as little tax as possible. It's refreshing to hear a Jensen Huang admit, we made our money in California. Why should we flee our tax responsibility in California? That's refreshing to hear. But on the other hand, I also understand the Newsoms and some of the other billionaires who are saying, this is a place of opportunity and should remain a place of opportunity. We already pay a lot of taxes, et cetera, et cetera. I don't think anyone will be hit or even notice that billionaire tax, except the state would really benefit from it. And it would work on things that you don't have to worry about if you're a billionaire, like helping the homeless and building new housing and cleaning the streets and helping with infrastructure, things that billionaires, for the most part, get to live without worrying about. So I get both sides of it. It would be nice to see those who made a lot of money here in this state feel a responsibility to pay to help keep the state strong, like what Jensen Huang is saying. And the others, they can flee because they are rich and they can go anywhere they want.
Yeah, and if they can go anywhere they want, this state depends an awful lot on Silicon Valley. And if we start seeing an exodus of the wealthy, then that's VC money, that's nonprofit donation to nonprofits, all of those things. And I think I think billionaires would feel a lot better if they thought that the state was managing its spending better.
True, I just don't know if that would make that much of a difference. When you threaten rich people with tax, they tend to flee. And that's too bad
Yeah,
because Silicon Valley, if the billionaires leave, what they're essentially saying is this had so much opportunity when I was young and able to afford housing for me and my family and able to start a business. And I became rich. And now the state needs my help to continue and to let the next generation have a place to live, support a family, and become rich and create jobs. And they're kind of saying, I got mine, I'm leaving. And so that's why you get the Jensen Huangs and the Ro Khannas saying, hey, we need to do something about this. We should pay the taxes. On the other hand, right, the traditional knee-jerk reaction is, whoa, you want more money from me? I got to go to a place like Texas or Miami where they tax less. But they don't have the VC infrastructure because they don't quite have the universities paid for by taxes. They don't quite have the housing and infrastructure helped by taxes that California has traditionally had. So I'm curious where we go from here. But revenue-strapped California, sure, it hurts those who need help, but it also hurts those who need jobs from tech companies. Because if there's not enough housing, young people aren't going to start startups here. And if young people don't start startups, we don't get trillion-dollar tech companies here either.
right. And I'll agree with all of that. But at the same time, the billionaires are the gold ring, on the merry-go-round. That if you're a young entrepreneur and you're dreaming, uh, who are your role models? And if your role models are moving out of the state and eventually moving operations out of the state, at least part of them, and employment goes down and the opportunities go down, you're going to follow them to Florida or you're going to follow them to Texas. And the source of these investments, like Stanford University, how much of Stanford University was built with billionaire money, donations? I mean, look at all the buildings with their names on them. Will Stanford stay at the top of the world's universities? I mean,
I don't know. I
there's a
mean,
lot of downstream danger, I think, of this.
right. Universities are also, by the way, built with tax dollars.
Yeah,
And if those go away, where do the Berkeleys go? Where do the UCLAs go? Where do the Santa Cruzes go? These are where a lot of schools, a lot of graduates are going into tech companies right now. Does that continue, that pipeline? It's a pipeline to tech companies, pipeline to Sand Hill Road. And Jensen Huang is saying, I got mine because I came here to this state, to this place, and it made me rich. And now I don't mind giving a little bit of it back. And others are saying, I came here, I got my opportunity, got rich. Oh, they want taxes? I'm out. And that's too bad because I worry about the future of Silicon Valley if that pipeline does not continue.
and that's it for this week, Scott. Thanks. Thanks it for now, folks. You can find us on Spotify, Anchor, Google Podcasts, Apple Podcasts, and YouTube. You can see Scott on Facebook and X, and of course, almost every weeknight on NBC Bay Area. And you can hear me regularly on the BBC World Radio show Business Matters. We'll see you next week. Bye bye.